Good morning, trade pros, and welcome to our morning market update for I don't even know what day it is anymore. Thursday, I believe it should be Thursday, November the 20th of 2020. I got a lot today. I got a lot. There's quite a bit. Let's start out with the most important news that happened in the last 24 hours. Well, I wouldn't say most important, but up there with the most important. Let's just call it the most important. Nvidia, the earnings. Jensen Huang said that GPUs are sold out, meaning they've produced everything they've sold in the cloud division. And I think Santa just saved the Santa rally, or Santa. Nvidia could have just saved the Santa rally. All right, they didn't just beat; they kind of like annihilated expectations. All right, and this is probably the most important earnings report of the whole quarter. Everybody was waiting for. We got it towards the end, but it was a very important time, and we kind of needed it before the bottom of the market fell out because the retracement was getting a little excessive downside. There was a big absence of buyers, and it looked like the sell side started accelerating as we were approaching the lows, which, Nvidia came in just in time. So the numbers were blowout for the report. EPS 130 versus 124 per share expected. Revenue was up 57.05 billion versus 55.2 billion expected. That's 62% increase year over year. Imagine making $57 billion in a quarter, and that's a 62% increase versus the prior year. That's mind-boggling. Data center revenue, 51.2 billion, up 66% year over year. And free cash flow, 22 billion, up 32% year over year. Operating income up 62% year over year. It wasn't a beat, it was a statement. Nvidia made a statement yesterday, and when asked in an interview, Jensen Huang himself said that, some people see AI as being a bubble. We think differently, or we see it different, and gave a lot of different reasons. The post-earnings call was really an interesting one for anyone who's an Nvidia stockholder and is interested in the space. Was a great call. I know some of them are recorded, but as he answered analyst questions, he really gave a lot of info, a lot of honest, straight up info, and it's positive for the company. All right. Nvidia guided 65 billion in revenue for next quarter versus 62 expected. So not only did they beat the earnings, they increased their guidance as well. All right. So basically what Nvidia said was this, and then we're gonna there's so many notes for Nvidia. I don't want to kind of beat this horse to the ground because you probably already read the news, but AI demand is accelerating, order book visibility stretches 2027, and basically Nvidia is 7% of the S&P 500 and almost 14% of NASDAQ. So what it's telling us is, look, maybe it's not a bubble, all right? Bottom line is this. You're going to see heavy Nvidia flows for today, all right? You're going to see strong semis. You're going to see better risk tone throughout the session. We already have. Overnight, it's up a lot. We're going to talk about trading plan in a minute when I turn around. And you're going to see a lot of volatility around the options chain on NVIDIA. And how will this impact the Santa rally ultimately? Put it this way. I love that NVIDIA came out and blew away earnings. It's the statement that we needed, all right? But it still doesn't mean AI isn't the bubble because there's one earnings report, right? Or it doesn't mean it's not going to be a bubble. It doesn't mean that yet, but it kind of takes the eyes off of that focus at the moment and starts to look to more positive things in the market, which will contribute to the upside. All right, so the Santa Claus rally is a stretch of time where in December the market tends to rally, and it usually actually happens with the turkey trade or Thanksgiving, which is coming up next Friday. I think it's next Friday, 28th, and 2 or 3 days before that, getting long the S&P 500 futures and selling it the week after when it reopens has been a net positive trade for forever. So it starts there and then bleeds into the Santa Claus rally for a year-end rally as consumption increases and people are just more jolly and excited and happy into the year-end holidays. All right. So here's the thing about that Santa Claus quote-unquote rally. We couldn't have had it without NVIDIA blowing away the earnings. I think the way we were going, it was going to get pretty ugly. All right, we're all going to get lumps of coal in our stockings. But NVIDIA came to the rescue. And we may get it now that NVIDIA blew out earnings. We may still get it. But it's still not guaranteed. There's no guarantees in this business. So maybe this blowaway report is actually an opportunity for large spec traders to get out of their NVIDIA positions. Okay, I'm going to give you the counterpoint to all this. I'm not going to just be a fanboy of the stock and then pump it up. And And then the broadcast, I'll give you the flip side to it. Maybe if you were worried that the AI was a bubble and you didn't want to sell Nvidia 12% off of the highs, maybe now at 8%, what is it up? 3.5%, 4%, or 2% was up last night. But maybe now it makes a little bit more sense because this blow-away report will get you some buyers. And if you're a big position holder of a stock and you need to get out, and means what? You're a seller. And if you're a seller, who do you need to transact with? The buy side. So if you got a lot of stocks, you need buyers to sell your position too. So you tend to sell positions at peak excitement on optimism in the stock, which this could be it. So maybe it's not going to be just SoftBank. Maybe some other traders will also use this opportunity to offload Nvidia. And in fact, even though it's a blowout report, we get a situation where the earnings reports are so good, but the stock price is down. All right, on just a great opportunity to sell it if you own it, or if you've owned it for a long period of time, want to take some profit going into the holidays yourself, spend some money on expensive purses and watches for your husbands and wives. All right, we'll see in the days and weeks to come. I'll tell you this, Santa Claus rally is now more probable that Nvidia came out strong. We could very well be back on the bull swing in the market. Okay, but we don't know that, so we're gonna have to watch that. FOMC, we got minutes yesterday as well. Moving on to another topic. The Federal Open Market Committee released their minutes at 2 p.m. Eastern yesterday in the afternoon, and it showed a very deeply divided committee. Some wanted a 25 basis point cut, which is what we got, and a few wanted no cut at all, and some wanted a 50 basis point cut. So there was a lot of dissent despite a decision, all right? And, pardon me, hawks, which are people who want voting members who would like to see higher interest rates and less liquidity in the market, so basically less support for stocks, these are called hawks, said that inflation has stalled. The progress on inflation has stalled and 2% still isn't secure. Therefore, why are we cutting rates? Let's leave the policy. And doves who just want to cut rates and throw money at the market said that the downside risk in jobs and there's a lot of weakness in the economy. So let's just cut again. So the discussion on December based on the meeting minutes was that... one second. They said that a cut would be appropriate if data weakens. What data? Well, economic growth data. Because on the quarterly meetings, they also do something called SOPs, which is standard projections as well. And with these standard projections, they have dot plots and they have a statement on the economic outlook, etc. All right. This is, at the end of the day, this is the bottom line. I wrote a lot of notes for this. Strong support for ending QT on December 1st, quantitative tightening. The AI members warned that AI-related equities look stretched. All right, there goes the Fed to talk about the AI bubble. I wrote a lot of stuff in here, but this is the bottom line. The Fed is split, and the bar for our December cut is high, and the minutes push the market to a more hawkish stance, meaning it's less likely now that we get a December cut, and the probabilities dropped. Now, up until yesterday, I would say, there was still a good chance to have these meeting minutes. I'll tell you why I don't think we're going to have them now, because there's a really big update as well, and this is massive, massive update for traders primarily. All right, the BLS, Bureau of Labor and Statistics, is a government branch, government arm that releases data. The BLS also releases the non-farm payrolls report and a plethora of other data reports. All right, so we're going to get this December meeting from the Federal Open Market Committee, and they will not see the November or October U.S. jobs report before their meeting on December 10th. Think about that. They are going to make the same decision, or they're going to make a decision on December 10th with the same information they currently have. Why don't you just do the meeting? Honestly, just do it. Do it now. Just get it over with. What's the point? Wait until December 10th if you don't get any new information. They won't have the jobs report for October. They won't have it for November. So what, they're gonna just do it from September's report? That's nuts. All right. We're gonna get the November jobs report on December 16th, 6 days after the Fed meeting. So, no October unemployment rate. The household data couldn't be collected. All right. So here's the deal. I don't think the Fed is going to be able to help the market before the year ends. I really think There's no cut in December. I think Powell's going to say we have no data, we have no cut. Let's pick this up again next year. Have yourself a Merry Christmas. Goodbye. Don't spend too much at one place because the Fed's not here to help you out. So your portfolio won't grow as much. All right, but honestly, in all honesty, I think that's the outcome. And the odds of a rate cut have slipped a lot, and rate cuts have really been pushing the market upward. If you strip the involvement of the Federal Reserve from the market performance, I think S&P trades around 3,000 points. It's crazy how much has been added to the value of the S&P 500 index, the valuation of United States stock market because of the Fed. All right, and I traded during 2009 when the collapse happened, and Ben Bernanke at the time, Fed chair, came out with TARP, Trouble Asset Relief Program. It was all the news and all the rage, and markets were literally bottomed out. And what people don't know is, since 2009, after the Fed's emergency TARP program, it's never gotten out of the market. It's always bought equities, always bought treasuries, not equities, pardon me. It's always bought treasuries, mortgage-backed securities. It's always propped the market up, all right? The emergency help came, and the market got addicted to it, and we haven't got off it. All right, let's turn around. Let's look at some options activity and the trading plan, but I hope you enjoyed that. That's where we're at on the news front. Good morning, King Kong. I love that name. Morning, sir. Good morning to J-Rad, Marco. Let's go, buddy. I want Santa Rally, too. I was promised a Santa Rally, and I promised it to other people, too, in terms of the presents. So if they want presents, we need equity gains. Morning, Hector. Hope you're doing good. All right, let's get into it today. How about we get into it, guys? Yesterday's discussion was, we'll do a call wall in a second. Yesterday's discussion in the YouTube video, we had this level here, this prior low and this prior low. And I kind of grabbed these liquidity points here, and I said 24 to about 28. If you look at the video, I just drew it, extended them out. Would be probably one of the first levels we'd be looking for a long opportunity, and then the last one would be down into the 6,600. And I remember distinctly telling you yesterday, like, look, anywhere below there, it's going to start to get pretty ugly. And thankfully, we never got there, and the first level filled. So right where we're looking at it, we come back in not once but twice. And the second time, it gives you a little bit less of a chance, and off we go. All right, so yesterday's update was clutch. It was on point. It was good. And then obviously, this upside happened before Nvidia, and you could see the Nvidia spike. Like, it's probably pretty hard to hide, right? You guys can see the Nvidia spike. So where does the market find itself today? Well, for that, let's just go a little bit to the left here with this chart. First, this is where the call wall is for today. And I want to bring your attention to the fact that it went from 10 to 20 yesterday. The gray one is yesterday's level, and then the red one's today's. So call activity got closer to price, and that usually means more buying, but you can't really defer that. But it's kind of a light correlation, but it's still a correlation nonetheless. So the calls have pressed closer to price. It does put a little bit of a resistance in here. It is a little fortunate that we're approaching it, because I think without this call wall here, it has a lot more upside into the 20s and 30s. All right, and then the put walls all the way to downside support is like 65.40. It's kind of out of the way at the moment. So market has adjusted its stance on options activity. I think we're bullish. The question now becomes, how do we feel about the 6,800? All right, 6,800 is a big level, and the reason it's a big level is it's a whole number, 6,800. There isn't really too much technical data or resistance until you actually get to 6,900. But you see, that's another 100 points. And so we can't expect 30 points today just to get to 6,800, and then another 100 points just to get 6,900, which above there, you're pretty much open up for a run to all-time highs. Retest the prior high, and off we go. So you're coming up to an area that you're going to start to see a little bit of resistance, I think. And resistance means you're going to see a little bit of selling, because whoever sold here, all right, is going to defend this area for sure, 6,800, 6,790-ish. That area is going to get defended. Whoever sold up here, sold up here is also going to defend it. Whoever bought it down here is also going to be selling it. So you have a retest of the sell side on the trend, and you have selling from the buy side off of the lows. You're going to get some selling at some point. We're running into it. The question is, can we still stay bullish today considering all of this has happened? And the answer is yes, right? The answer is yes, we can. Stop trying to disqualify opportunities for yourself because you think it's already happened. I get it. We've gone up a lot, but it doesn't mean it's over. We could still be on the long side. We just got to be more cautious. We got to use our brain while we're long. We got to be long and smart, not long and dumb. And that's all you need to do. Simple as that. Have a good day. I'm kidding. But sure, we could still be long, but we're expecting these long trades to kind of not run upward for as long. We already know that on the long side, we've kind of missed a lot of the move. Like part of it was Nvidia, part of it was yesterday, and now we have some limited upside. And I still think we can get the 6,800, but you got, 28 points. And that 28 points doesn't need to be a straight shot like it already has been. I think we pull back first. So where do we pull back to? I think the first level for an opportunity on the long side, 45 is good. That's really far down now off of currently where we're at of the 68. So I would grab 55, 45, and 30. These are 1, 2, 3s. Below this 30 structure, I think we kind of pull back to the prior day highs, overnight lows. We start to fill in this price a little more. I don't really want to wait all the way down there. I don't anticipate I'll be still buying 62 points lower, but we do need to pull back, all right? And then that's what we're looking for, the long opportunity. Here's some cool charts that I want to show you. I don't know if you could see this. I will probably have to restart my platform now that I moved it off screen, but I don't mind. You guys are worth it. Hang on. Oh, great. I'm froze. All right. Well, how about this? A really cluttered chart. I present to you the most cluttered chart in the world. I don't know why I can't get this separation here on Sierra. Sierra charts on Mac is Sierra charts on Mac, right? It's kind of picky. So here's what it looks like. This is a weekly volume profile chart. Composite behind it. It's not supposed to overlap. I'm supposed to be able to get a gap. Let me try it one more time to scale it. If it doesn't work, I'll just give up. Oh, there we go. Not that I endorse giving up, but sometimes you have to. Spoken like a trader, right? All right, so we go to the upside. We had this big kind of breakout weekly structure that failed, and it ended up being the beginning of the downside. All right, then we had a week that retested the upside and traded lower. Another week where we had a bit of a rally and we traded lower, and this is where we marked the lows off the 6,600. Okay, so we have escaped the weekly value, but we're kind of coming into the prior 2 weeks value, and there's quite a bit of volume here. So this is where I expect the resistance to be. All right, and I think 6,700 ultimately is the big level of support. I don't want to wait for it today. It's not a daily level. It could be a multi-day level. All right, and then if you look at this volume profile chart, just quickly, I use it for whenever we have moves and, we need some insight on levels, but I'm not a religious volume profile guy. All right, then here's the upward resistance, which we could already see from our candle chart around 6,780 to 6,800. Even this level here is going to be interesting. All right, pullbacks then that are buyable are the 30, like we said, in the 45. You got the POC here and the value low. And, 6,700. I like, 6,705-ish, but 6,700 to 05 is a good level. We're not going to wait for it to get there today. It's too much. All right, and, of course, the two trades are then this. Long on the 45, okay, long on the 30 opportunity. And if we get jammed up into these, high 90s and we can't break, then, the short's coming too. So those are the three trades. 2 longs, 1 short off the resistance. All right, we made a great rally attempt. We've pushed higher. It's looked good, but, let's see how much more we have of this optimism. I'm going to start on the long side on pullbacks. If I find a good order flow opportunity, I'll jump in on the momentum. All right, but just know that the upside has a resistance coming up. We're about to run into it head first into the ceiling. So let's see what happens there. And then we could know a little bit more from that point forward. All right. I don't know. I hope this was helpful to you guys. If you think it was, let me know. And if you want to find any other kind of info that you want to include in this morning market update. I'm willing and open to do whatever you guys want. Let's make it a report for us, by us type thing. All right. The policy interference is crazy with the Fed, King Kong. You know it. Thank you, Marco. I appreciate you, brother. It's really nice. What's up, Born in 2944? Yeah. It's been an interesting stretch for sure. For the Fed too. You know, they're already confused. Imagine being already confused as a group, and then having to go through a shutdown where you have no data. Like, I don't know if it helps their confusion or makes them more confused. But yeah, it does seem like an odd way. You've kind of connected a thing in my mind by you saying that. I know what you're getting at. It's an interesting thought. It's an interesting thought to do all that to just obstruct the Fed, especially when you're not getting a cut. But yeah, they're not able to do their job. I think if we didn't have the government shutdown, I think we would have had some more cuts, to be honest with you. Already like built in. December, I don't think they're going to cut because they don't have the data to do it. So now we push it to what, like March is the next meeting. They could do it in January, February as well, but March is a big quarterly one. So let's see what happens here, guys. Trade it tight today. A lot of the gains have already been, if you look down or underneath you, you're standing on a platform. All the gains are below you, so be careful. There's a long way to fall if you slip off that platform. But for now, look up and see if we can climb another 10 to 20 points, 30, tag that 6,800.